Hello and welcome. This is Sharad Dubey and you are watching Market Fatafat, and joining me is my colleague Ankita. Good afternoon, Ankita. The markets are still looking a bit range bound. Over the last week we saw 5 days of consolidation. Today also a little bit of correction. How is the market looking?
Absolutely, Sharad. As you rightly pointed out, we are still very range bound. It is a very lackluster day of trade coming in after last week's consolidation. Also, today also we are very range bound. In fact, we have managed to recover very little, but nonetheless pretty much within that same range. We have recovered just 20 odd points from the day's low on Nifty. Nifty Bank also a slight bit of a recovery coming in, but it's a recovery of almost 75 odd points, but nonetheless trading in the reds with cuts of almost 92 odd points. So very range bound here as well. As far as broader markets are concerned, mid cap is trading with cuts of 0.2%, and as far as small caps are concerned, they are seeing heavier selling activity with cuts of 0.4% coming there. The small caps are basically underperforming the frontline indices and the mid caps as well. As far as sectors are concerned, today FMCG pack is in focus today on the back of good operational updates that have come in from two FMCG companies, whether it is Dabur or Godrej Consumers. So that's really buoying the sentiment as far as the FMCG pack is concerned. HUL is also doing very well on the back of a UBS note. But on the back of that, good sentiments as far as the entire consumption basket is concerned. FMCG is in focus today. We also have the PSU banking and the energy pack that is doing well today. But on the losing side, we have Nifty Media and Nifty IT in that pecking order. And as far as the breadth of the market is concerned, right now, Sharad, it looks like it's tilted in the favor of declines for now.
Well, yes, Ankita, the broader indices are of course not supporting the markets, but what is supporting is the next 1 hour of action-packed news flow coming in, and joining us is our two colleagues from the research team, Rabinder as well as Kaniksha. So basically we are looking at the chemical stocks at first, and the first thing to pick out is the Niti Aayog report. Now of course the chemical stocks are buzzing in trade, and importantly this is a precursor to an act which can be passed from the parliament, and this would be India's first PLI scheme when you are looking out for chemicals. Now there are certain points also to look at. Roughly 5 to 6% production share is expected for the Indian chemicals in the global value chain, and if you look at the net zero trade balance in chemicals, that's expected to kick in by 2030. Now the OPEC subsidy, that's a very important amount. That's roughly 65,000 crore for additional investments that's expected to kick in, and a 3 lakh additional investments would be coming in.
Alright, so on the back of that, all these chemical stocks are in focus today. But let's move on to more updates coming in on the stocks. Well, we have the quarterly updates that are coming in, right before the Q1 results. We have IndusInd Bank also in focus on the back of its Q1 updates. Now that stock is trading with cuts of 0.3% right now. But let's take a look at how the numbers look like for IndusInd Bank. First up, it is a rather muted set. Firstly, the net advances stand at 3.3 lakh crores. That is down 3.9% on a year-on-year basis and down 3.1% on a sequential basis. The deposits stand at 3.9 lakh crores. That's down 0.3% on a year-on-year basis and 3.3% on a month-on-month basis. The CASA ratio is also at 31.5% versus 32.8% on a quarter-on-quarter basis. Now, Jefferies is maintaining a buy rating with a target price of 920 rupees, and Morgan Stanley is maintaining an underweight with a target price of 750 rupees. They see it's a muted quarter, and they expect a gradual earnings recovery, which starts in the second quarter of FY26. On the back of this, on the back of muted numbers, IndusInd Bank is down and now 0.3%.
Well, yes, IndusInd Bank showing correction, but Dabur India is in focus. Rabinder, brokering upgrade also, and a Q1 update, which is strength. Can you just show us what are the important takeaways?
Well, as on back of Q1 update, Dabur is in focus. The company has announced the Q1 FY26 update, and they say FMCG saw a quarter-on-quarter recovery in demand and volume grew in urban markets. They say that the consolidated revenue to grow in low single digit and consolidated operating to profit marginally lagged revenue growth. And if we talk about home and personal care segment, the company said that it will perform well driven by oral home and skin care, and Dabur Red toothpaste and all are has shown a strong demand and market share gains. If we talk about beverages segment, then companies say that the companies to focus on the active portfolio going ahead and the international business to post double-digit CC growth. Nuvama has come out with the note and they have retained their buy rating with target price of rupees 650. So back of the inline set of good set of Q1 FY26 business update, Dabur India is in focus and the stock is holding a gain of more than 3.5%.
All right, Dabur India in focus on the back of good quarterly updates and a brokerage note. But let me get on board our technical head of technical research and derivatives Angel One now, Sameet Chavan, who's joining us on the technicals. Hi, Sameet. Thank you so much for taking the time out and joining us. Sameet, so you have picked out Dabur as well for us on the charts. We now know the fundamental reason why Dabur is moving on the back of good set of quarter one updates. But on the charts, what do you see? This counter has been moving up in the last few sessions. I mean, it hasn't done much in the last 6 months. Last few sessions, we do see an up move coming in. So, what do you see on the charts for Dabur going ahead?
Good afternoon. See, this stock has been a laggard since last September. Stock has done nothing. It has been, continuously declining. And in last 3-4 months, if you see, the stock went into a consolidation mode. So after a long time, it seems that the stock is likely to come out of its slumber phase. If you look at the price and volume activity today, its stock has already given a decisive breakout on daily time frame charts. It has challenged 200-day simple moving average as well after nearly 9 months. And now, considering the overall volumes and the placement of RSI momentum oscillator, it shows that this momentum is likely to stay for a while. So, soon we would expect the stock surpassing 520, 525, which is an intermediate resistance for this counter, and then heading towards the next cluster of 540, 560. So at least after, nearly a slumber phase of 9 to 10 months, this stock is, showing some early signs of revival. So at least in the near term, 540, 545, and once that level is crossed, the stock can head towards 565 as well.
Yes, 565 levels is something to watch out for Dabur. And also, interestingly, Kanishka, if you'd like to point out what's happening in Mahindra Lifespace Developers, there seems an important launch in Pune.
That's right. It's actually part of an existing launch. Now it is in the spotlight because it launched a new tower in its flagship residential project that is Mahindra Citadel in Pune. Now why this is important is because this new tower features premium 1 BHK apartments which are aimed at young professionals and first-time home buyers. This comes in the against the backdrop of strong demand for its earlier phases, most of which are already sold out. Now, part of a 2,500 crore GDV project, this development offers IGBC Gold pre-certified homes with eco-friendly features and top-notch amenities as well. Now, with this, Mahindra Lifespaces is looking to tap into high-growth residential demand in Pune's urban cluster. Now, following this development, the stock is up about 0.5% in trade today in an otherwise muted environment.
All right, Mahindra Lifespace is up in a way in trade. But coming to you, Sameet, you picked out ICICI Prudential for us on the charts. Another counter which hasn't really done much in the last 6 months. So from here on, do you see some sort of a breakout happening? It's trading upwards of 2% today. What do you see on the charts for this?
See, as of now, breakout has not happened, but it seems that considering the overall movement in last couple of weeks, and it is supported by decent volumes. So it seems that the stock is likely to surpass its recent swing high of 680.82. So it's a important level to watch out for. Once the breakout happens beyond 680 on a closing basis, this stock would certainly confirm a good positive momentum to unfold in the near term at least. And then the next potential target for this particular counter would be around 715, 720. Yes, we saw a good level period in this particular counter for nearly, I guess, 3 to 4 months now. In last 3-4 weeks, in fact, it has gained some momentum. We can see a series of higher highs, higher lows on daily time frame charts, and once now the breakout happens beyond 680, this stock is likely to do in the short to medium term.
All right, moving on then to the next counter that is in focus today, and that is HUL. Now remember, the entire FMCG basket is in focus. In fact, it is a top sectoral gainer on the back of the quarterly updates that have been trickling in. And HUL is also in focus. In fact, HUL is the top Nifty gainer right now, trading with gains of 3+%. Now, a note by UBS that maintains a buy call, and it has set a target price of 2,800 rupees on the counter. Now, they feel that there is a compelling risk reward in the making. The valuations should hold if the growth rebounds in the second half. The risk reward is turning very favorable for HUL as it has a dominant scale. It needs to fix parts of its portfolio, but it should meaningfully rebound in the second half. Now, FY27 could also continue with the strong earnings growth momentum. And on the back of that, UBS is maintaining a buy on HUL. On the back of that, HUL is in focus today with gains of 3%.
Well, yes, Samit, focus is PNB, and we're seeing some strong build-up happening on the positive side when it comes to PNB, and it is actually gaining also. If you take the PSU banking pack over here, we are seeing a strong momentum. What's your view on it?
See, overall, if you see last couple of months have been good for the entire PSU banking space. Some of the peers, some of the mid and large cap stocks have performed well in last couple of months. This stock has been, showing some signs of revival. Already we can see a series of higher highs, higher lows on daily as well as weekly time frame chart. Stock is now staying convincingly above its key moving averages. And now once 115 is crossed, which is the important pivotal point for this particular counter. Once 115 is crossed, this stock can head towards 125, 113 probably next 3 to 4 weeks time. So as of now, breakout has not happened, but it's an important level to watch out for. Once 115 is crossed, yes, one can certainly go long, and then stop loss would be somewhere around 106. Target 125 to 130.
125 to 130 is the target for PNB. But with that, it's time for a quick breather. Don't go anywhere. After the break, we're getting you some more buzzers on the other side. Stay tuned. Welcome back. You're tuned into Market Fatafat, where we are taking you through all the buzzers. But before we get started with all the buzzers yet again, let's talk about the action that's coming in on primary markets. And if you've been watching us regularly, then you clearly know that Sharad has been synonymous with IPOs, primary market, and all the action that's been happening. Sharad, you, like always, have all the dope for the IPOs, and especially the SME IPOs.
Exactly.
The two new kids on the block. One is Smart and Power Systems, and the other one is Chemcart India.
Yeah.
Take us through the details of these IPOs and give us all the dope.
Exactly. Actually, the problem is the dope is actually on the negative side, because we have done a detailed analysis from the RHP, and first one is Smart and Power Systems. The merchant banker is Arihant Capital Services, and interestingly, the company is having a negative cash flow. We check the financials. There is, of course, the issue is there on the strength part. Of course, there is an increase in debt levels. That is something to ponder upon, and a high import dependency coming in. And when I speak about dependency, that is basically coming in from China, and there's a heavy reliance on imports. Now that translates into a forex risk. Importantly, the profit margins, they have seen a sharp jump. Now that's from almost 3% to 6% in just 2 years. Now will this sustain, or this has just happened only for the IPO? That's a question to be asked. Also, positively, the IPO is attractively priced versus the peers, and a higher ROE is there. Of course, joining us is CA Tapan Doshi. Tapan, what's your view on this company, Smart and Power Systems, and what your recommendation would be?
Yeah, sure. See, as you told, no, this there is a portion of the IPO, no, where you can say, no, it's always a questionable. Now, one of the thing is that geographical concentration is 72% revenue is coming only from Haryana and UP. Their top 10 clients contributes almost 33% of the revenue. And as you told, no, their operating cash flow is negative. One of the reason is that they have a higher interest no cost. Now, if you see the debt has gone up to almost 16.6 crore rupees. So that is also one of the issue. Also, no, they rely a lot on imports from China directly. So there is always a forex risk or any geographical concern or trade concern. It will impact them directly. Again, they don't have any type of institutional government contracts. They normally sell it to the retail customers. So that also, no, you know how fragile is the retail sales normally, and it goes up and down. Capacity utilization is not so great. Again, as there is no as the capitalized utilization is on a lesser side, no, sometimes no fixed cost may impact a lot that PNL. Margin has gone up from almost 2.8% to 6.3%. That is also one of the question you have to ask. See, if I see the financial part, of course, ROE and all that is good, but when I see overall PNL and the scope where the company is currently standing, I think this currently this IPO is a avoid from my side.
So Smart and Power Systems is an avoid call. Of course, let's look at Chemcart India right now. Of course, the merchant banker are Smart Horizon Capital Advisors, and there are certain concerns and positives regarding this upcoming IPO. Of course, most of the business is there on just bulk trading. Now, whenever there's a bulk trading, there is no moat as such because their own brand is not in question as such. That's more than 95% of this. Apart from this, there is also forex and import risk coming in. And interestingly, promoters are also operating in the same line of business. Now, that is where the conflict of interest comes in. Apart from this, also there's a sudden spike in PAT. Of course, like the last issue's analysis, this might be a window dressing ahead of the IPO, where almost 8 crore of PAT was recorded in FY23, and now that has jumped to almost 24 odd crore rupees. Will it sustain? That's the question to be asked. And of course, there's a lot of promoter related party transactions also, which is a cause of concern. But on the positive side, there is the asset light model, which is on the positive side. And interestingly, it gives us a mixed views when it comes to the overall IPO analysis. Tapan, how are you looking at Chemcart? Are there more concerns than positive?
Yeah, talking about this IPO, now see, there almost more than 50 to 70% revenue is coming from Maharashtra, Gujarat, and Delhi. Again, a very fragmented business. Okay, there is no entry barriers as such, so anyone can easily enter. No, there is no moat as such. Again, 95% of the revenue is coming through low margin bulk trading. Now, no, in this type of business, anyone can enter easily. Again, their top 10 buyers contributes almost 54% of the revenue, and they have a lot of churn out on their clients. Okay, they are almost 340 to almost 440 clients they are churning out. Forex and import risk is there because they are importing from China and USA. So exposure of currency volatility and all that there. Again, if you see there, whatever IPO proceeding they are going to get, they are going to use it for the working capital. Promoter related concern, as you rightly told, is already there. That is also an issue. Again, the PAT concern, there is a big spike on the PAT that need to be, one has to scrutinize why such a big spike. When I see the complete financials, all that, this IPO also looked like fully priced. That's why I'll give an award to this IPO also.
Thanks, Tapan, for your views on both the IPOs, and it is strictly avoid if you are looking to invest in them. Of course, let's talk about the metal stocks, and interestingly, all the metal stocks, the aluminium, the copper stocks, they would be in focus as government has released the aluminium and copper vision document, which will be driving the green manufacturing. Now, the vision document is outlining a roadmap to scale up aluminium and copper. Now, this production could go up as high as 6-fold by 2047 as well, and it's aiming to expand the bauxite production capacity to roughly 150 million tons per annum. The outline plans that adds roughly 5 million tons per annum of smelting and refining capacity by 2030.
All right, so on the back of that, the entire metal basket is in focus today. But from metals to IT, Sameet, you have picked out Tech Mahindra for us. That one is trading with cuts of more than 2+% right now. Tell us, what do you see on the charts? Because even in the last 6 months, this one has not done anything. It's been correcting, it's been consolidating from here on. What do you see in the charts for this?
Yes, but if you see it from the April lows, stock has already given more than 20 odd percent move. So yes, after seeing such a steep rally in such a short span, there's a possibility of some sort of price-wise as well as time-wise correction, and this is what we have been witnessing since last couple of weeks at least. Stock has declined from its important swing high of 1770.20 and is now approaching its important support cluster of 1580. So there's a strong support in the zone of 1580 to 1550. If this weakness extends a bit, another 3 to 4% from current level, then it would be a good buying opportunity in case of Tech Mahindra. There's a strong base we can see somewhere around 1500, 1450 for this particular counter. So around 1580, 1550, the stock seems to be a good buy.
All right, so that's the view coming in on Tech Mahindra on the charts. But coming to you, Robin, the Godrej Consumers is what you've picked out for us. Of course, on the back of the quarterly updates that have been keeping the markets abuzz, especially the FMCG pack has been buzzing on the back of those. Take us through the updates for this.
Well, as another FMCG stock, Godrej Consumer is in focus on back of their Q1 update, where company has announced the Q1 FY26 update. And on the standalone business front, they say that the company to deliver a high single-digit value growth and mid-single-digit value growth, and standalone EBITDA margin to be below normative range to improve. And the benefit of palm oil moderation to only seen in H2 FY26. For the home care, they said that the company to deliver a double-digit value growth and UVG. And for the personal care segment, company say that the value growth in low single-digit impacted by soaps. And standalone business excluding soap to deliver a strong double-digit UVG. And Nuvama has also come out with a note, and they have maintained their buy rating with target price of rupees 1460. So back of the strong Q1 FY26 business update, Godrej Consumer is in focus, and the stock is holding a gain of 6.5%.
Alright, Godrej Consumers up and away more than 6.5% on the back of Q1 updates. But with that, it's time for a quick breather. Don't go anywhere after the break. We're getting you more buzzers on the other side. Stay tuned.